Saylor's billion-dollar bet, Metaplanet's BTC Blitz, and nation-state shift to hard money. Welcome back to the Bitcoin Street Journal podcast. I'm your host, Anna, coming to you live from Bitcoin Street, where the signal is always loud, the memes are always spicy, and the fiat illusion is always unraveling. If you thought yesterday's episode was wild, buckle up, because today we're hitting warp speed. Strategic reserves are multiplying, billion-dollar buys are stacking, governments and corporations are falling in line. This is the global awakening to Bitcoin, and you're living through the greatest monetary revolution in history. Bitcoin Live price update. At this very moment, Bitcoin is trading at $103,679 with a commanding market dominance of 54.6%. That means more than half of the entire digital asset economy is parked in BTC, and that's before we factor in the latest Saylor-sized stack. Halving watch. Post-halving block rewards are down to 3.125 BTC. We've officially entered a tighter supply era, fewer coins, more demand. Remember, the halving doesn't cause the pump. It sets the rules. The rest? That's just math meeting mania. Breaking Michael Saylor's strategy just bought another 13,390 Bitcoin for $1.34 billion. That's right, billion, with a B. Average buy-in? 99,856 per coin. And this wasn't just a buy. It was a signal to the market. Institutions are not slowing down. They're doubling down. Strategy now holds 568,840 BTC. That's nearly 40 billion in Bitcoin, at an average cost of $69,287 per coin. Michael Saylor has turned Bitcoin accumulation into a corporate art form. Samson Moe weighed in. The era of making new fiat is over. This isn't just a quote, it's a prophecy. We're watching the death of discretionary monetary policy and the rise of mathematically enforced scarcity. Meanwhile, in Asia, Metaplanet, Japan's Bitcoin beast, acquired another 1,241 BTC worth over $126 million. They didn't stop there. The firm also issued $15 million in 0% bonds just to buy more Bitcoin. Who needs hotels when you can hodl Satoshis? Taiwan is stepping into the arena. Legislator Ko Ju-chun is calling on the central bank to allocate 5% of its $50 billion reserve to Bitcoin. That's $2.5 billion worth of sovereign BTC backing. Asia's waking up, and they're stacking fast. Now let's talk domestic. In Missouri, lawmakers just passed House Bill 594, which eliminates capital gains tax on Bitcoin. Yes, you heard that right. The first U.S. state to make SATs tax-free. The future isn't just arriving. It's passing legislation. And in New York City, Mayor Eric Adams isn't playing small ball. He wants to make NYC the global crypto capital. But more than that, he's talking about long-term value, not just chasing meme tokens. He sees Bitcoin as the bedrock of the digital era. Elsewhere on Wall Street, Coinbase just secured its seat at the big kids table. The company is officially joining the S&P 500, making it the first pure-play crypto firm in the index. CEO Brian Armstrong put it best. First they fight you, then they add you to the S&P 500. David Bailey's Nakamoto Holdings is making moves too, merging with Kindly MD and launching a $710 million Bitcoin treasury company. This is the new corporate playbook. Launch a business, raise fiat, buy Bitcoin, rinse and repeat. In macro news, the U.S. Treasury Secretary says it's time to decouple from China for strategic necessities. Meanwhile, the U.S. and China just agreed to a temporary trade truce, reducing tariffs on both sides. The result? Risk on sentiment is returning, and Bitcoin is back in the headlines. ETF inflows keep climbing. Yesterday alone, spot BTC ETFs saw over $5 million in net inflows. Cumulative ETF inflows are at all-time highs. BlackRock's IBIT picked up 10,572 BTC, while only 3,150 were mined. Fear and Greed Index? It's flashing high greed. Bitcoin whale and shark wallets, that's 10 to 10,000 BTC holders, have accumulated over 83,000 BTC in the last 30 days. That's conviction, not speculation. Volatility alert. This week is stacked with high-impact U.S. economic data, CPI, jobless claims, and retail sales. The outcome? Market chaos, and Bitcoin benefits from chaos. SEC news. Chair Paul Atkins declared a new day for crypto, pledging to end enforcement-first tactics and embrace regulation that actually fits digital assets. Commissioner Hester Pierce echoed the sentiment, stating, Tokenization cannot reach its full potential without legal clarity. Could we finally be seeing the SEC wake up to reality? BlackRock's Ethereum Trust just filed for in-kind redemptions, meaning it can now directly buy back ETH. That's huge. Meanwhile, over $215 million was liquidated from the crypto market in a single hour. The pain is real, unless you're stacking. Altcoin Corner. Ethereum popped 44% in 72 hours. Abraxas Capital pulled 185,000 ETH off exchanges. But remember, altcoins are exciting. Bitcoin is eternal. Solana is also heating up. The number of wallets holding at least 0.1 SOL has surged past 11 million. That's growing user adoption. Still, nothing touches Bitcoin in terms of strategic reserve status. DeFi Watch. Paradigm-backed Exponential has launched YO, a new yield optimization protocol. Pump.fun introduced a revenue-sharing model for meme coin creators. Is this sustainable or just another Ponzi in disguise? Time will tell. Dubai is now accepting crypto for government services via Crypto.com. Their goal? Become 90% cashless by 2026. That's not just digital transformation, it's monetary revolution.
Meanwhile, Animoca Brands is planning a U.S. listing, citing crypto-friendly regulation under the Trump administration as a unique moment for market entry.
Speaking of Trump, American Bitcoin, a mining firm linked to the Trump family, is going public via a merger with Griffin Digital under the ticker ABTC. Strategic stock-for-stock deals are the new mining meta. Over in Congress, stablecoin legislation is still stuck. But states like Arizona and territories like the Northern Mariana Islands are pushing forward with their own crypto frameworks. Decentralized governance in action. Pleb shout out. Huge props to the Nostr crew lighting up zaps like it's Block 50,000. Whether you're memeing, building, or just holding the line, this pod is for you. Value for value. If you found signal in this episode, zap us some SATs. Subscribe on Nostr, share it on Fountain, shout it from the rooftops. We're building Bitcoin Street one block at a time with no ads, no VCs, no middlemen. Final word. Whether it's Saylor's billion-dollar buys, Missouri's tax-free BTC, or Taiwan proposing sovereign stacks, the theme is clear. Bitcoin is no longer an experiment. It's the monetary foundation for the next century. And every day you delay is a day you stay trapped in a fiat system built on nothing but debt. This is Anna signing off from the Bitcoin Street Journal podcast, where we don't chase the news, we anchor it to the chain. Stay sovereign, stay signal. See you on the next block.